as well. Most of that time, we've been managing sustainability money. And it's an area where, ESG has come from being very fringe activity to really absolutely, core mainstream now. So it's a really interesting time. Today, I will spend about 10 minutes setting the scene, and then we'll all go around and give some input from different perspectives. Now, we're very fortunate today to have a great panel with slightly different variants on the ESG and impact area. So firstly, we would have Charlotte Nisbet, who is at Jonas Henderson, and she's the governance responsible investment analyst there for EMEA. And she is going to talk to you a bit from slightly more from the public markets. Then Shona Jawara is associate at PG Impact Investments, part of Partners Group originally, and she will talk to you from more of the private markets. And then lastly, but by no means least, we have Tabitha Farahani, investment officer at Kenya, which is a single family office. And she will give a different perspective again of all this interesting area. So without further ado, let's get going. Now, do send in your questions all the way through, because we will deal with them at the end. But if you have questions as we're talking, do just write them, send them in, and then we will deal with them as we get there. So we'll hopefully give about 20 minutes for questions at the end. If any are left over, we'll deal with them at a later stage. So ESG, why is this an attractive area for a career? For anyone, for a start, but why particularly for women? So for anyone, it is a growth area at the moment. As I said, it's gone from being quite a fringe activity to a really mainstream. And in fact, this is where all of the growth in asset management is at the moment. So in the last year, we've seen about 350 billion going into sustainability, ESG and impact. And that is at a time when asset flows overall have been pretty flat. So it is where all of the growth is. There were 700 new funds launched last year in this area. And so if you're going into a career, you want to find somewhere where there is growth, because there's more opportunities for everybody. If there are funds being launched, then somebody has got to manage those funds. And if there are new funds, there will be more jobs and more opportunities for anybody who is coming into the industry. And it means you can get going quicker than you would be otherwise. So you need to have growth. Now, why is this growth there? It's because there is more demand for this from all asset owners, from corporates, from investors, retail and institutional. They all want to invest in a way that it is more in tune with principles. And they're being driven by regulation, they're being driven by government and consumers. So it's a shift really with everyone facing in the same direction and wanting to go the same way. The data is now available to be able to investors to measure more of the social, environmental and governance statistics properly. There are now millions of data points for people to be able to invest in a more rigorous way, and this is increasing all the time. So it's there's more supply of these funds and there's a huge increase in demand. So that's why growth is there and it's going to continue. So that's why it's interesting for anyone. Why is it particularly interesting for women? Well, it gives more consonance with personal values. This is something that we've always seen, trying to get more young women into the city. One thing they've come up with a lot of the time is that they just don't like what they see of the financial markets. They don't like the fact that it seems extremely hostile, it seems unethical, amoral. It's just not an environment that people feel attuned to, that they want to work with, that they actually feel is something in tune with their personal values. And now within this area, you could be completely and totally have consonance with your personal views. And so I think that for women seems to be that much more important. And then lastly, women are better represented in this area. Overall, in the looking at all of the funds which are managed, only 11% are managed by women at the moment. in the active space, and it's something that we're all working to try and improve. But in the ESG, sustainability and impact areas, there is more female representation. And that is because this was historically seen as an area where it was not seen as important. And in fact, that helped get women into it because they were allowed to do it. And now it's turned out that, in fact, there is a huge demand for these people. So, in fact, more like double the amount of ESG funds are managed by women as the average. And since that's the way that all the growth is going, then women are benefiting from it. So it's actually been one way which has helped increase that percentage of overall funds managed by women. So that's it. That is the overall attraction, really, for women coming into the city and this area in particular. So I will leave it there and hand you over for a start, to Charlotte, who is going to talk to you at a practical level of what she does, how she got to where she is, and why it's attractive.
Thanks, Lucy. Good evening, everyone. So I'll just give a sort of brief introduction of what my role is, and then sort of go into a bit about how I got there and actually what a sort of typical day is, because I appreciate ESG, impact investing. There's a lot of different jargon out there. It even took me a very long time to get my head around it all when I first started in investment. But as Lisa said, I'm in the governance and responsible investment team, which is basically our way of saying ESG at Janus Henderson, who is a global active asset manager. So really what my team's role is promoting ESG integration across the business. And we're an internal resource for all the other portfolio managers and analysts to come to with regards to ESG issues. A big sort of part of what we do is looking at, as Lucy said as well, there's a huge amount of data going around at the moment as being provided on ESG. And so we're sort of responsible of sourcing that data and making it available for our investment teams. We also do a large part of it is really the research and analysis, which is my favourite bit, and I'll go on to talk a bit more about that later, on sort of specific ESG issues, which can be stock specific, sector specific, and then more sort of general thematic work around climate change, diversity, employee welfare. So that's a big part of what we do, and I'd say then the core part really is actually company engagement. So we're primarily invested in public market equities and then fixed income as well. So my team is sort of responsible for engaging with a lot of the companies that we're invested in, with the other portfolio managers and analysts, if there are any issues that might arise that we think are worth discussing with them. But also actually, as Lucy said, there's been a huge sort of rise in popularity of ESG style stocks. And so actually there's a huge amount of opportunity for investment as well. So we often talk to companies about the very good things that they're doing as well. A quick sort of background of how I got to my role at the moment. I actually only started last January. So I had 2 months in the office before was remote working. So it was quite an odd introduction to working in a new role. And prior to that, I mean, starting from the beginning, I did history at university. So not a sort of typical maths and economics background. So that I then went into doing a lot of internships actually in financial PR. So I'd always had a kind of keen interest in financial markets, but found that, you know, to begin with, my applications just weren't successful in trying to go straight into an investment role. And I interned for a financial PR firm for 3 months, and then they offered me a role when I was a graduate. And I worked there for 2 years, and my main clients were asset managers. So a lot of my time was spent with fund managers. And sort of after 2 years, I thought I would actually rather to be on the other side of the table working within the investment industry rather than on the financial PR side of it. I then got a role at a small boutique sort of mid-sized asset management firm called Saracen & Partners in their private client team. So looking after families and trusts. there, and that's where I started my sort of career investment as an assistant investment manager. Did a lot of exams, still doing them to this day. And I think something for me personally, that I found quite daunting when I started was, again, the jargon and everything that sort of comes with working in the industry. And I have to say that it just sort of comes with experience and doing the exams. And when I look back at sort of 5 years ago when I first started in the industry and today, and sort of the knowledge built up, I definitely wouldn't have sort of ever imagined that. And then I worked there for 4 years, and Saracen has a very strong sort of ESG focus. So really my whole training was had that kind of embedded into it. And it was something that I personally actually really enjoyed. And I guess probably looking back 5 years ago, it wasn't that mainstream, as Lucy said. And so actually taking that more keen interest was something that I sort of built a sort of niche around, and sort of would look at analysing the companies that I then was also involved in researching UK smaller companies for a small portfolio that we ran for some private clients, and integrated ESG analysis into that. And that was something I found really, really interesting, and decided actually I want to do this full time. And that led me to apply for my role at Janus Henderson. And as I say, I've been in that role now for a year. I guess what might be useful is just talking a bit about what a typical day is. And I am sure everyone says this, but it is very different every day. The sort of key things, as I said, that we're responsible for is the engagement part. So a lot of that goes with that is voting is a huge part to do with my role as well. So annual general meetings where shareholders have their right to exercise their voice on various different issues. My team's responsible for sort of managing all the votes that are cast, and we will reach out to the portfolio managers to flag any issues with them. We do our research around it, and then they will make the decision. And as you can imagine, in a large global asset manager, there are thousands of companies that we're voting on all year round, but mainly sort of March, April time, May, it gets particularly busy. So actually the first thing I do every day is check the dashboard to make sure that there's any companies that need to be voted, and then sort of go about distributing that to the relevant portfolio managers and analysts. A lot of what we do is with the research, so a huge amount of reading goes into it. Some days I spend all day not speaking to anyone and just reading, which I love, and so that suits me, and that's really kind of what drew me to the job of being an analyst. And often that sort of entails as well going to conferences and seminars on different types of topics that to do with ESG. So it's actually this afternoon I was listening to the CEO of the Climate Change Committee discuss, what investment needs to go into the UK to achieve net zero, which is a fascinating conversation. But often there'll be different types of seminars and conferences to do with sort of employee relations. There was a huge amount during the pandemic on sort of employee rights and a lot of other social issues that have been brought to the fore during the pandemic, which I personally sort of, the social side of the ESG analysis is something that I'm particularly interested in. So looking at culture and things like that. And then also a lot of my time is spent actually speaking to companies. So when I work with particular investment teams, I can sort of flag potential issues that I think might be relevant to discuss with a company. And then I'll reach out to the company and try and find who's the best person to talk to. Often it's the CEO, increasingly actually, and interestingly, we are seeing more CEOs and CFOs talking about ESG, which is something they typically didn't do. Particularly on roadshows, they just cover the financials and the operations going on in the business, but the ESG part was kind of left to the side, and that would be a separate person that would address those types of issues. But increasingly now it's actually a sort of senior management are taking it very seriously. And often it's board members that we speak to on these types of issues, and chairmen. So that's something that I really enjoy about the role, is getting the opportunity to speak to the CEO, various different senior people around businesses, and board members as well, to understand how they're approaching environmental, social, and governance issues. And often I find with these meetings is actually what I find very interesting and really useful to then sort of put into the analysis is actually that the meetings in themselves give you a lot of information. The way that people answer the questions, they're often quite challenging questions for people to be answering. And so for me, that's what I find really interesting actually, is the way that people answer them. Because you can often tell that that they're not actually sort of putting their money where their mouth is, if it's to do with their approach to climate change, etc., just by the nature of how they answer some questions. So for me, that's what I really enjoy. And you know, you get to meet a huge range of very interesting people, particularly at the conferences. You know, unfortunately, we haven't been able to do any publicly, like in person this year, but some of the virtual ones that I've done have been fascinating, because again, I think the draw to me with ESG is that there's no right or wrong answer with a lot of the areas that we're looking at, because it is a very subjective view on some things. And so what I quite like is sort of constant debate that can be had, you know, amongst my own team, with other people that I speak to that work in the area. So that's something that I find really interesting about that. I think hopefully when things go back to normal, my job probably will entail a bit of travel. But I was actually meant to go to our office in Denver in the summer, but that was obviously cancelled because of COVID. And I think that's a really exciting part as well, is having the opportunity to travel a bit. And then I guess just a little bit about, you know, things that I wish someone had said to me when I was younger. Firstly, being a sort of humanities-based student. So I did history, French and Latin at A-level. So I stopped doing maths at GCSE. And I wish someone had said to me that I didn't need to do maths or economics at A-level or university to then go into work in investment. Because in my head I had, I don't do maths and I haven't done economics. So I probably can't like go for that role as a graduate. And I wish someone had said, no, you can, because actually a lot of stuff that you do learn doing a humanities style subject like history is the research and analysis, which is a huge part of what I do. And a lot of what is entailed in the investment role has been learned through doing the professional courses. So as I said, like, I'm still doing the CFA now, but there's a lot of other exams that I've done in the past, and that's really helped sort of retrain my brain, as it were, to the sort of mathematical side that is required within the industry if you're sort of in a more investment focused role. And the other thing I wish that someone had said to me as well was apply for jobs that actually you don't tick every single bullet point on the job application, because I would often go through job sort of specs and say, well, I can't do all of those, so I can't possibly apply for it. Whereas you probably find boys would say, I can do 2 out of 10 of those, so I'll give it a go. And I actually probably still do that now. I probably did that when I was applying for my current role. So I definitely think that's something that I would say to my younger self, because that really definitely I think is and I know, speaking to other girlfriends, that's what they would do as well. So that would be some advice that I would give to my younger self. And I'd also say, you know, really encourage anyone who's got any interest to go for it, because to be honest, what's the worst that can happen is that it's a no. But actually often sort of going through the process of interviews, you continue learning, and often it's difficult to know where to start with investment. And I found actually just reading a lot and finding your areas of interest So for me, it was like technology and consumer stocks, mainly because those were things I could relate to. So I thought that they would be, I read up more about them and sort of thought those will be areas that I can talk a bit about experience from as well, from my own sort of end user point of view. And there's a lot of books as well. So finding sort of niche areas within the investment world that you're interested in, I think really adds when applying for roles and interviewing, because as long as people can see that you're keen and you want to learn, I think that's a huge part of it as well, particularly at the entry level roles. So yeah, I will stop there and pass on to someone else before I blabber on too long.
That was really, really interesting and very, very helpful, and there's some good sort of practical tips there as well. So thank you for that, Charlotte. And there's quite a few questions coming in for you as well, in particular. So we'll get around to those. So to Shona, and who's slightly different in private markets. So over to you, and to give your experience and ideas.
Great. Hi, everyone. Firstly, apologies. My camera and lighting situation is very strange, so the screen looks very blurry. So I hope it's not giving anyone a headache. But yeah, as Lucy mentioned, I work in private markets. So I work for a private markets investment firm, Partners Group, and then within that I sit in PG Impact Investments, which is a separate entity, and as the name suggests, we're impact investors. Maybe to take a step back, so from what Charlotte was speaking about, which is ESG, which is focusing on companies doing their ordinary course of business and ensuring they do so in a responsible way that protects the environment and protects all stakeholders, more or less. There's then a spectrum all the way to philanthropy, which is just giving people money to achieve good outcomes, and that's more the kind of charitable and donor sector. And impact investment sits in between. There's lots of different types, but essentially when we make an investment, we want not only a financial return, but also a social impact, or sometimes an environmental impact return. So in terms of PG Impact strategy, we invest globally across emerging markets. So 80% is in Africa, Asia, and Latin America. And then we can do some investments in developed markets as well. In terms of sectors, we look at healthcare, education, food and agriculture, affordable housing, financial services, financial inclusion, and energy access. And these are sectors that we've identified that have outsized benefits for what we call underserved populations, which can be very low income people or people who just struggle to get access to quality goods and services, that you or I would probably take for granted in the sectors that I mentioned. I mentioned there is a broad spectrum of impact investors. So there's sort of impact first, where you maybe just want to preserve capital, you don't need an exciting return, but you're more interested in the impact side. And then there's commercial first, which is where we sit, which is that we've given ourselves a difficult job of trying to achieve both at the same time. So when we screen investments, and as Lucy mentioned, these are private markets investments. So I sit on the equity side, and we look to take stakes in companies or make investments into other funds. When we make investments, we can say no to them on the basis of impact, and also on the basis of kind of what we project to be the potential financial returns from those investments. So that's a kind of high level overview of what my role entails. In terms of how I got into it, so I studied, I was also not a science or STEM graduate, so I studied philosophy, politics and economics, and actually stopped economics in the first year to focus on philosophy and politics. And again, was never really identified as somebody who was going to go into finance, and thought I'd probably end up going into law or consulting. But the funny story is that at the time I was dating somebody who said, oh my God, investment banking internships, best thing ever. Really, really hard though, you probably couldn't get one. So me being incredibly competitive was like, okay, fine, let's see what it's all about. So I went to a couple of the open evenings and met actually a female recruiter from Deutsche Bank, and just had a really good conversation with her. And that kind of sparked an interest in learning more, and actually eventually applying for an internship with Deutsche Bank, which I got. So I was in the global markets training program. So what did I do? I looked at FX rate sales, so I was on the trading floor, looked a bit of structuring, it was a rotational program, and then found a home and was offered a graduate job in debt capital markets. So helping to raise debt, so issuing bonds for large FTSE 100 companies like Tesco, Unilever, Shell, so sort of very kind of mainstream finance. I did that for 4 years, and I think that, I'd always been, as I mentioned, it wasn't, I think working in finance was never something that, I wasn't one of these people walking around campus with the FT under one arm and very kind of finance oriented. But, I always viewed it as, okay, well, this is a really core part of the way the world works. And this is something that you need to understand in order to do other important things. My passion had always been for kind of international development. And, looking at Africa, where I'm from, it was always clear that, a big hurdle to development is how underdeveloped financial markets are. And this seemed like a space where there was lots of opportunity if you had a really good grounding in kind of more mainstream finance to then move into a more Africa focused role. So that had always been kind of a vague plan. And then after 4 years, I left Deutsche Bank. I did a French language course, and then I went to Senegal and volunteered for an NGO. And at that time, I was really just looking to broaden my horizons, learn new things, learn about countries that, I had not lived in, but was really interested in finding more about. And through that work, I started sort of getting in contact with different social enterprises. So I was working on a maternal and child health campaign with this NGO. And one of the things that struck me was that they were spending lots of money on these sort of education campaigns around menstruation and how to manage that in a kind of safe and hygienic way. But the key thing was people didn't have access to kind of sanitary towels and the stuff you need. So started trying to think, well, okay, this is a huge obstacle, and okay, they're expensive. Why are they so expensive? Is anyone else producing them any cheaper? And that's the type of investment that PG Impact would do today. So investing in a company that solves a problem that, people may be trying to solve from a purely philanthropic way, but there are also sort of market solutions to that problem. So through that work, then was kind of interested in social enterprise and, looked at a few roles with social enterprises. And that's when I really learned about impact investing, because before then I hadn't heard of it. And so got in touch with somebody who was working for PG Impact in Switzerland, looked on their website, thought this seemed really interesting, thought why not? So went to work there as an intern for a year. And there is where I kind of got the first experience of social impact and really began to love it. And as I mentioned, the kind of dual role of using everything that I'd learned at Deutsche Bank, but also kind of being able to channel it into things that I actually found, I was passionate about, things that I feel really good about at the end of the day. And so that's the kind of, that was the motivating factor for getting into impact investing. I guess one thing is that obviously when you're applying for funds sort of raise money periodically. So at that time they didn't have a full-time role. So I went and did a couple of other internships until PG Impact did have a full-time role back in London. And so I moved back to London at the beginning of 2019. So I've been in my current role based in London for 2 years. In terms of what my day-to-day looks like, again, I'll repeat, it's always really different. But I would say 50% of my time is spent kind of analysing potential new investments. So that's everything from sourcing, speaking to advisors, speaking to other investors, seeing what they're interested in, what they're looking at, reading about different themes, different investment themes that can be really interesting. Right now, I've started looking at payments. So essentially, if you want to start up a small business, if you're a small business owner in most parts of Africa, it's really expensive to accept electronic payments, which can be a huge barrier to growth. So there are companies in the fintech space who are offering kind of payments platforms that enable cross-border transactions. They also enable the huge migrant population in Africa to remit money back home, which is, you know, a key UN Sustainable Development Goal, is to reduce the costs, because, you know, this can cost, like, you can lose, you know, 5-10% in transaction fees, and particularly if you're a very low income person, this is really significant. So everything from sourcing more thematically or just speaking to people, to screening, so when a specific opportunity comes in, analysing essentially the merits of doing that investment and the risks. And, you know, we look at that both on the commercial side as well as the impact side. The impact side, we'll look at things like, you know, who is the target beneficiary? How deep is the impact that you're delivering for that beneficiary? Is it something life-changing, or is it something that's a bit, you know, less tangible? We'll look at the scale. So we really like models that have a potential to scale and reach lots of people, rather than models where, you know, they only really work at a small size and they can't grow. And lots of these streams of analysis will have both impact and commercial benefits. And I think that, you know, trying to solve the pieces of that puzzle and trying to back companies that are delivering strong impact, while also identifying kind of the commercial strengths and weaknesses, is a part of my job that I find very intellectually stimulating, I'd say. So 50% is evaluating new investments, which includes going to investment committee and arguing for our investments, to our independent investment committee, which is a part of the job that's really interesting, and you get, you know, challenged. And I think it can be easy sometimes to fall in love a bit with your deal if you've been working on it for a while, and so you have to really go into that room and be ready to kind of take a balanced view and not, I guess, be too emotional if sometimes the deal doesn't go forward. The remainder of the time is spent on monitoring. So once we've made investments, we're shareholders, stakeholders in those companies, and we like to deliver value, both, again, financial as well as impact. So we might, I guess an example is that one of our companies is it's a health tech company in South Africa, and they are thinking about diversifying into other geographies, and other geographies come with different challenges. You know, we have networks in those geographies, so we've been kind of in quite regular dialogue with them just to try and understand how we can help them with that transition, and also to challenge them on, you know, is this the best thing for the company? How much money should you spend on doing this? How quickly should you try and do this? How ambitious should the plan be? So I think I enjoy the fact that you get to be a sort of mini business owner on various different projects, and kind of bring a critical eye and be a partner, but also kind of have that challenge relationship as well with our investees. And then the remainder of the time, so for me personally, I spend a lot of time on kind of impact measurement. So some people call it social performance management, some people call it impact management and measurement. And essentially it's just, how do we communicate the impact that we expect to deliver, and then how do we track against our expectations, and report on that to our own investors, as well as kind of just more broadly to other stakeholders within PG. And that's a kind of a side role that I have within PG that I find hugely interesting, because I think I think finance roles can be quite execution driven. So you're always kind of fighting the biggest fire and always kind of just doing the next thing that needs to be done. And this is a part of my job that I like, that's a bit more reflective. And, you know, you can ask questions like, you know, how can we really measure our contribution to the particular impact of an investment? And then we kind of go away, think about it, come up with a framework, kind of test it out on a few deals. And so I think these longer term, sort of more theoretical projects, I really enjoy, alongside the more kind of fast-paced day-to-day element of the job. In terms of advice, I would definitely echo what Charlotte said about, you know, not being afraid to take a chance on various roles, like on a role that you don't feel quite there for, because that's definitely always been the case for me, and I've always been pleasantly surprised. I would say also, don't be scared to advocate for yourself, for pay rises, for promotions. I was again shocked to, like, I don't know, I'd been working for 5-6 years and spoke to a male peer, and he said that every job he had negotiated his salary or his title upwards. And I was like, whoa, like I wouldn't even ask. I'd feel like that was so rude. Like I'd feel like they'd think I was really kind of, you know, a very egotistical person. And then the first time I did it and I actually got something close to what I wanted, I was, again, really surprised, and kicked myself for having not done it from the beginning. And I think, yeah, it just shows that, you know, particularly if you're, you know, in my job, in my day-to-day, I think I'm quite forthright when it comes to negotiating legal agreements as part of our role. So the fact that you would do that for yourself only makes you actually look better, and definitely not worse. So I definitely say that's a trick that I am sad I missed, but I definitely would advise. I think also as well, you know, I've moved sideways and kind of come back to finance after spending a little time doing other things. And when I've been evaluating CVs for roles at PG, you know, it's nice to see people who have had a diversity of experiences. And so, you know, particularly for ESG, if you've had experience, you know, working on an environmental project at university, or working for an NGO, or doing something that really shows that you know, environmental impact, climate change is something that's really important to you, or that, you know, healthcare is really important to you. Whether that's in a financial or a non-financial role, that can really add to, you know, the standard things that one needs to see in terms of analytical skills, etc. So I think, yeah, don't pigeon yourself into thinking, okay, to do impact investing, I can only do impact investing, because people do appreciate that you can bring an outside perspective. And I think, as Lucy was mentioning, yeah, it's quite a holistic type of investing, because you need to, you know, sit and put yourself in the shoes of the end beneficiary in a quite, I guess, yeah, in a quite granular way in order to be a good impact investor. And you need to ask yourself questions like, you know, something actually that I've been working on this year is trying to build out a job creation framework. And I think something we come up against in impact is that very kind of, I'd say, charismatic, photogenic type models tend to do better. So if it's, you know, giving a microfinance loan to a rural woman, and you have a picture of the woman with a goat, and it's like, it's very clear that these are like poor people that you've helped with impact investing, then that really sells, I would say. And trying to say, well, you know, providing capital to companies that they can create quality blue collar jobs in factories that have health benefits and opportunities for promotion, doesn't have that same, I guess, the same aesthetic that the more charismatic models have. And I think being able to kind of go one level deeper and really try and understand, you know, what is it that we're trying to achieve? You know, why is it that I feel like I have a good standard of living? Like, a big part of that is that my parents had good jobs, and, you know, without that, like, would I want to be an entrepreneur, a micro entrepreneur? Probably not. I'd always rather have a salary. And so I think being able to ask and answer those questions, it requires a level of emotional intelligence that I think women are probably socialized into having at much earlier age, and that can be a huge kind of a huge benefit as a woman, or just, yeah, as somebody who's willing to not just be completely hard-nosed and face in the spreadsheet. So I would say, yeah, don't be afraid to show that extra side in interview processes. And I've probably been talking for a while, so I'll stop there, but happy to take any questions afterwards.
No, well, we can listen for a lot longer, but we ought to get. So thank you very much, Shona, and there will be some questions coming through. So Tabitha, if you are ready and willing, if you could talk from your perspective of ESG and how you have got to where you are, and how you are, what do you do on your work?
Sure. So I think Shona gave a really kind of good introduction of commercial first investing and impact first investing. And so I think we're now moving into the part of the spectrum that is impact first. So that's really helpful, I think, to demonstrate the different spheres that exist within ESG and impact investing. So I'm an investment officer at Kennyarth. We're a single family office focused on impact first investing. So to break that down, a family office is an entity which manages wealth on behalf of high net worth or ultra high net worth families. And our view from the impact first investing, what that translates into is really trying to divert our capital into sectors and areas where capital doesn't naturally flow at the moment, but realizing that to do that, and especially at this sort of initial building stage, those sectors might need concessionary capital, and we're willing to take concessionary returns to generate that impact, say relative to a finance first investor. In terms of, if we break it down to what sort of impact we're really focused on, we target rural livelihoods, and what we're trying to do there is maximize the impact that we have on vulnerable and marginalized communities worldwide through measurable impacts such as increases in income, increased access to goods and services, affordable housing, etc. So from a sector perspective, that leans itself towards sectors such as financial inclusion or agriculture, but we also look at the likes of energy access, water and sanitation, really the whole spectrum. And at least for the internal team, from a geographic perspective, it lends itself more towards emerging markets, which for the internal investment team is probably the key area that we focus on. In terms of, as part of impact first investing, we do acknowledge a need for debt in certain markets as kind of a missing financing instrument at the moment. And that aligns really well with our risk appetite, where, as impact first investing was described before, our focus is really capital preservation. And so debt sits really comfortably within that, because we can structure to take less risk on the principal, but we're also willing to take that lower return versus, equity type returns. So to speak a bit about kind of the evolution of my role, I joined about 3 years ago, and originally was an analyst focused both on the direct side, so lending to specific companies, as well as looking at some fund investments. We then brought in-house our fund due diligence, having used an advisor previously, because we really felt we weren't finding funds that really matched the impact first alignment that we needed. And so increasingly I've been involved in building out that due diligence capability, but also building out the pipeline, because it's not something that you can simply Google to find 100 appropriate funds. To touch on my background before, I think I'm a prime example of what Lucy described in terms of women entering investment banking and potentially just finding a misalignment, or just the environment wasn't right for me. Prior to that, along with everyone else on the panel, I did an arts degree. So I did languages and history of art. And the particular languages I chose alongside history of art was totally useless for what I decided to go into. But as the others have said, I think that's fine. You don't need to feel that you're boxed in if you haven't done a maths degree or an economics degree. But that then led me on. I'll admit I was one of those people who didn't really know exactly what they wanted to do. Investment banking graduate schemes are acknowledged to be something that's good to do. I knew I was interested in financial services. So I entered that, ended up similarly in a debt capital markets team, but really knowing early on that whilst I viewed this as good training, it wasn't what I wanted to do long term. And that's where I started looking into the world of impact investing, where really I looked at it from a perspective of a colleague of mine said, essentially, if it paid, I would work for a charity. And I kind of thought, well, there's got to be something that uses investment skills that has more of a charitable or kind of charity aligned purpose. And so I started looking at impact investing as part of that. About 3.5 years ago, I think making the transition from commercial investment to impact investing was quite difficult, because generally I found the approach was a lot of impact investors liked the skill set, but they already wanted you to be in impact investing. And so I did find it a bit of a challenge to kind of get that foot in the door. but it is really one of those of just apply, find opportunities that you really like, and eventually one of them will really like you too. So to touch on, I guess instead of describing a bit about kind of what I do on a day-to-day basis, I think I'll talk more about what I really enjoy in my job and what I find challenging, because I think they're constant themes from a day-to-day. In terms of enjoyment, there are two things that really stick out. One is the entrepreneurs and the fund managers we work with, just that sense of alignment on pretty much every single call that we have, that these are people who've chosen to address a problem, address a gap in the capital market, where they could be focused on doing something more commercially oriented. That's a really kind of pleasing part of the day, just having that connection that we're all part of the sector because we've chosen to be part of it. And you also see it filter through from the entrepreneurs down to the teams, down to the beneficiaries that you meet on due diligence trips, of seeing ultimately the impact that you're generating whilst you're one step removed as the funder. You do get to actually see what your work does in a tangible way. And a second part, I'd say, is really the variety of what I do. Because these are growing sectors, emerging geographies, a lot of research, as Charlotte says, a lot of research goes into this. And every opportunity you have to approach completely anew, because it's almost the opposite of investment banking. It's not cookie cutter at all. And that just means it's really challenging. It's really interesting. You find yourself becoming, the expert on a particular type of nut because it's the company that you're investing in. That's what they do. And so that's probably from the kind of intellectual side, the most stimulating part. But then to flip to challenges, that can also be in and of itself quite challenging, because a lot of the markets that we're looking at, the quality of information isn't particularly good. The accounts aren't kind of top 4 accountants signed off on them. A lot of the research, you're researching sectors where they're new, so there aren't reports that you can read. And so you really do have to rely on a kind of building your network to build that knowledge, but also just identifying that sometimes there is no comfort blanket of knowledge, just getting comfortable with gaps, because that's the investment sphere that we're in. So I will leave it there because I know we have lots of questions, but happy to answer any.
Okay, thank you very much, Tabitha. We have lots of questions, which do panelists feel free to type, but I think there's quite a few about advice for getting in and qualifications. I do jump in other panelists, but I think that the CFA ESG certificate, which has really taken off in the last couple of years, is really worth looking at. I put the CFAUK.org. It gives all of the syllabus and more ideas about it. So do look at that. And there was a question about why it's different from the CFA General is the three levels of the standard industry qualification, going through all areas of investment analysis, whereas the ESG certificate is specific. So, but all of the information is on there. I would really recommend having a look at that. Then there's quite a few questions for actually there's one about Charlotte about how activist you are in do you invest, try to change things, or do you are you more defensive about it? So do you avoid, what's your strategy as far as changing the way that companies behave?
Sure. So the way it works at Janus Henderson is that each investment team sort of takes their own approach on ESG. So we're the sort of ESG team, and we work with all of them to try and work out what are the priorities for them and their clients, because they're managing different pools of money for different sort of end clients. We definitely, I wouldn't say, I mean, we're active managers, so by nature we do engage with companies a lot, but we wouldn't be activists, so we wouldn't be sort of building up a stake and trying to really influence the company in the way an activist investor would do. But a lot of the conversations that we have will be around, as I said a bit earlier, will be where we might, sometimes it might be a reactive thing. So you might see something has been announced by the company, which might be a bit negative, maybe to do with, you know, employee relations, things like that. And then you look to speak to the company to try and understand, you know, well, why has this happened? What are you putting in place to make sure it doesn't happen again? And those are the types of conversations that would be like a more reactive type of engagement. But a lot of what we do is proactive. So our team will work with, so for example, I do a lot of work with our technology team. So look at technology stocks a lot, and we'll do a lot of research and try and identify what I think and the team think would be the key sort of investment risks or reputational risks, which could have a detrimental impact on the share price or the financials of the company, and then sort of build a sort of engagement plan around that, and then, as I said, sort of reach out to the company and try and discuss those issues with the company. So it's not sort of a traditional activist approach as some investment houses would probably say that they're activist investors, but that's how we go about it. But it's not sort of taking a stake and trying to influence them by building up a huge position in the company to change them that way. I would actually, I know it may sound a bit corny, but actually I think it's like a partnership with the companies that we invest in, because at the end of the day, as the end investor, we want them to be better at the way that they approach ESG, because it's beneficial for our clients. And so a lot of it is actually a two-way communication. So they ask us what we think, what we want to see, what we want disclosed within reason. And that's actually how I find a lot of the conversations have been going recently. And they often reach out to us to ask us what types of things would be useful in your analysis. So that's the way it's sort of going at the moment, to be honest.
Okay, I think we've got time to answer one more question before we nearly have to wrap up and I'll hand it back to Vicky. But one question that's come through quite a lot is about, you know, backgrounds, and in fact everyone on this call, all the panelists have come from a non-economics, non-maths background. How have people got the financial, you know, the modelling skills and the analytical skills up to speed when you've come from an arts background? So I don't know, Shona, do you want to answer that one?
Yeah, sure. There is so much online. So before my first interview, they told me I had to do an LBO model case study. I didn't know what that was. I looked it up online. There's like a bunch of free examples. I think I just locked myself away for like 3 days and just did the examples over and over again. There's online tutorials. And there's quite a narrow range of things that they can ask you, like building a 3-statement financial model that work, like the stuff you can do in 2 hours, you can learn it in a few days. And I think that, you know, if you have not come from a background where people would expect you to know that, and you've taken the initiative to learn that yourself. It was the same for me. It was the same for the other analyst who joined around the same time as me. He had worked in energy consulting, and he'd also just taught himself. So yeah, look online, and there are tons and tons of free resources that were perfectly fine for me.
Yeah. Okay, that's great. All right, well, Vicky, over to you. And from my perspective, thank you to all the panelists. It's been really, really interesting, certainly for me, and I hope for all the participants.
Thank you all so much for this. I just want to run one more poll question, just one question, and also to just say thank you to all our panelists. Like I said earlier, Gain's biggest strength is this incredible network of volunteers we have who have so much experience in the industry in all different parts of it, and has just spent their time, like tonight, just sharing that knowledge with you and answering your questions. And So we'd be really grateful if you could please join me in saying a big thank you to our panelists, and please just stay in touch with us and attend like some of our other events, because we do have just lots more to share. Our website address is www.gainuk.org, and you can like find us on all the social media channels, and those are all sort of Girls Are Investors. And please do stay in touch. And once again, a big thank you to our panelists. We really are grateful for your time and your expertise and just sharing all that with us. Thank you. Have a good evening, everyone.
Thanks very much, everyone. Bye.
Thank you.
Thank you.
Thank you, Vicky, as well.
Thank you.